Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open, having a down day. Dow down about 300, NASDAQ down about 200. Well, what's happened here? We've really cut through the support levels. I thought that there was support for the S&P at the 200-day moving average, but it's already dropped down below that. And now maybe we get a little support at the 50-day moving average. Dow Jones is very similar. It's cut through the 200, it has support at the 50-day, while the NASDAQ and the Russell, they've dropped below the 200, the 50, and there's really no support. So I do think that those will definitely retest the recent lows, maybe even make new lows. Okay, now we got the bears in control of this. There's gaps to fill down below, and I think we're going to get some more selling. Now, nothing goes straight down. We're having a big down day today. We could bounce back. We could bounce back up to support levels, and maybe the support levels will hold for a while, but I do think that wave of selling still coming. Okay, let's move into the real estate market. Now, it's very fascinating to me. I'm having conversations with people about different things. Okay, a lot of people are saying, well, hey, you got to hurry up and buy a house right now because interest rates are going up. Well, that's true. Interest rates are going up, and you can lock in these, well, let's call it low rates. We're already at 5%. We were at 3%, but we can lock in at 5% before they go to 6 or 7%, right? But at the same time, you got house prices are starting to come down. Yes, they're actually starting to drop. They're actually starting to come down. Now, people, you know, a conversation I had with a girl, she just closed on her property, right? And she's going, well, I'm locked in at this low interest rate, so if houses come down, I can still afford my payment. Look, would you rather buy a house at a high price with a low interest rate or a lower price with a higher interest rate? Well, my answer all the time is take the lower price of the house. Why? Well, let's say you bought the house at, $800,000 and you're locked in at 3%, but the house drops down to $600,000, but now you're at 5%. Well, maybe you put down $100,000. You're already $100,000 underwater. It's hard to sell a house when you're underwater. You can short sell it to the bank, but actually you'd have to come up with more money just to get out of the property. You never want to buy a house at a high price when a lower price is coming. And a lower price is definitely coming in this market. Yes, interest rates are going to be higher. And yes, people buy houses with interest rates. They buy them with mortgages. So their payment is going to be high. It's just as high, but the price of the house is going to be lower. Look, when the price of the house is high, you pay a higher tax rate than you do when the house comes down. You pay a lower tax rate. You always want to buy a house at a lower price if you can. It doesn't matter about the interest rate payment. Interest rate payments adjust throughout time. And look, if they go up, they go down, you can refinance, right? If they go down, look, you can pay it off. You can make more money and pay it off. But the price of the house is what's important. You can't get out of a house if it's underwater. You bought it at 800, now it's at 600, you owe 700. You got to come up with $100,000 plus closing costs just to get out of the house. Now, I had another fascinating conversation with a young investor. Now, she bought this house as an investment. She's got a renter in it. And, last year she's collected the rent and the tenant is paying her and she's all happy, right? But she's thinking, well, maybe it's time to sell the house because it has gone up in value. But she's got the tenant in there and she wants to know if she should sign the tenant for another year lease and wait a year to sell the house. Well, you know what my reply was? Idiot! Oh, she's probably watching this and going to give me a thumbs down. But yeah, I think she's an idiot. You want to sell right now. You don't want to wait a year from now. You're going to get hurt. You're going to get hurt. Let me tell you about the investor game, how it's worked. Okay, look, I've been in the investor game for back in the 80s till now, let's call it. Okay, so in the 80s, houses, well, they were cheap. All right. And interest rates were expensive. Oh man, I think my first house, I was like paid 14% interest on my mortgage. And I was so thankful that I could get a mortgage, but it was 14%. But over the last 40 years, interest rates have come down. They've come down. And what have house prices done? They've gone up. They've gone up. They've gone up. Okay, so the investor game, you'd buy a house. I bought them back in the 80s, right? So, okay, so the house goes up in value. The interest rate goes down in value. All right, what do? Well, you refinance. You refinance at the lower rate, so your payment's lower, but you also take money out of the property because the value's gone up. Now, what do you do with that money? You go and you put it as a down payment on the next property. You wash, rinse, and repeat. You go put it as a down payment on the next property. Now you got two properties. Now what's happened? Okay, the interest rates continue to fall and the house prices continue to go up. What do? You refinance both of them, right? You refinance both of them and you take money out and your payment stays about the same because the interest rates are dropping. Now you can go out and buy 4 houses because you got the down payment for 2 more. This is the investor game, and this worked great. Worked fabulous. Worked fantastic. Well, until about 2008 came along, and well, that didn't work so well because prices actually came down. Nobody expected it. Prices couldn't come down on houses. And what's happening right now? Well, interest rates are going up. Nobody ever expected that interest rates can actually go up. This is so shocking. So the investor game is over. It's over. I'm telling you, it's over. If you're not BlackRock and Blackstone getting money for 0% and buying houses, it's over. I mean, even they're going to know it's over because the prices are starting to go down. So her as an investor, should she sign that lease with the tenants for another year? I would go month to month and I would sell the property with the tenant in it. That's what I would do. That's just my opinion. She's got a completely different opinion. She's saying, Mike, I look at houses are going to go up with inflation. And you know, she's partially right on that. She's partially right on that, but not completely. Houses are a debt instrument, right? Okay, now if everybody owned their house free and clear, yes, they'd probably go up with inflation. But everybody doesn't own their house free and clear. Most people have mortgages. A lot of people have 95% loans on their houses. And when they have to get out, what happens? That brings down the cost of the housing market. It brings the housing market down. You can look at the headlines. I mean, the headlines, it's pretty wild. Anyways, 12% of listings in the last 4 weeks have had price reductions. Now, we can't say price reductions. They've had price improvements. Price improvements, right? They've lowered their prices. 12%. Okay, that's new. Okay, now I live in the Bay Area. Now, here's something fascinating. Month over month, inventory has increased by 20%. The number of homes on the market is 20% higher than it just was a month ago. Now, every location's different. Real estate is very local, and there's certain areas of the U.S. where inventory is still low. It's not going up. But in the Bay Area, we went up 20% just in the last month. That's crazy. People are going, rates are going up. I want out. Inventory's coming onto the marketplace. Very fascinating. Now, new home prices are down. They're actually coming down. They say they're only dropped 10%, but believe me, I think it's closer to 20%. The news just hasn't reported on this yet. So we got new home prices coming down. Why? Well, they're not affordable. No one can buy them, right? So they're coming down. Okay, existing home sales, they've dropped 4 consecutive months, and it's going to be 5 really soon. As soon as they report, we'll have 5 consecutive months of down, right? The iBuyers are kind of running for cover. You don't see Zillow buying houses anymore, open door. No. They're getting their butt handed to them because prices are starting to go down. They thought they could just buy them and flip them at a higher price and just be the middleman and make billions of dollars. Well, it worked the other way. They lost billions of dollars. They're running for cover. There's a lot of things that are changing in this real estate market. I'm telling you, it's it's really kind of almost like a violent transition. I mean, for rates to go from 3 to 5% really fast is unusual, you know, and it's unusual because, well, because the Federal Reserve, they used to buy, you know, $40 billion a month of mortgages, and now, well, they're selling 35 billion a month, I think it is. Okay, so it's unusual what's happening, and this is kind of given kind of a violent transition to the real estate market. Now, if you can hold off on buying a house, I think you're going to be better off. Of course, this is just my opinion, but I think it's good advice. I mean, I am a real estate broker, and I'm supposed to say it's a great time to buy. But if you can hold off till September, or even better, till December, I think you're going to find a lot of better deals out there. I really do. Now, I know interest rates are going to be higher. That's true. But it's better to buy a house at a lower price with a higher rate. That's my opinion. Wasn't the opinion of the girl that just closed her property. She thinks I'm crazy. And maybe my opinions don't agree with you. Everybody's entitled to have them. That's just my opinion now. But back to the stock market. Stock market's showing us that we're going into a recession. What happens in a recession? Well, there's layoffs. People get laid off from their job, right? Okay, so when you get this layoff going, well, they can't afford their mortgage payment. So what happens? Well, they actually get foreclosed on. Now, I know for the last 2 or 3 years, you haven't been any foreclosures. Government says you can't foreclose on people. Government says they don't have to pay. Well, this is changing, and once you get that recession, there's going to be layoffs. There's going to be people that can't afford their mortgages, and foreclosures are going to become a normal part of the real estate market again. It's violent what's happening in the real estate market right now. Sit back and watch the show. That's just my advice. I'm Tall Mike. If you like this stuff, give me the thumbs up. It helps my algorithms on the YouTube channel. Hey, I appreciate you, and I want to talk to you real soon. Hit that subscribe button. Bye-bye now. Have a great Monday.